Minister, since the public health emergency began, and in order to contain the spread of the virus, sectors of our economy had to be closed down, with economic activity brought to a standstill. As a result, thousands of workers have been laid off, with households losing much and in some cases all of their income. With trading brought to a halt, thousands of businesses are today struggling to survive. This week's Stability Programme update offered a stark warning of the impact that COVID-19 has had and will continue to have on jobs and our economy unless government acts. The report forecasts that our economy will not recover until 2022 at the earliest, with 220,000 jobs lost this year and a rate of unemployment next year at twice that of 2019. This pandemic has clearly plunged our economy into a deep recession. The forecasts published this week were made on the basis of no further government response. That means that the length and depth of the recession is not yet set in stone. It will depend on the success of our public health response, and it will depend on the economic response of government. A severe downturn, long recession and cuts to living standards must be avoided, and it can be if the right decisions are made. Government response to this crisis must come in two stages: containing the economic fallout now, and then rebuilding or building a recovery that rewards rather than punishes workers and families. But first, just as we seek to contain the spread of the virus, we must move quickly to contain the economic damage that it has caused. Last month, back on the 23rd of March, I wrote to you, the Minister, outlining Sinn Féin's proposals for an immediate response to the crisis. They were based on the principles of acting fast and doing whatever it takes to protect incomes, to support businesses and to prepare for economic recovery. Among the measures that we outlined were an income support scheme that would subsidise 100% of workers' net weekly pay up to a maximum of €525 per week. The wage subsidy scheme that was rolled out by your government later on that month fell short of these proposals. They fell short in a number of areas because workers were only required to pay, or employers were only required to pay 70% of employees' wages. Workers with weekly take-home pay of less than €500 were receiving less than they would on the COVID-19 pandemic unemployment payment, and this gap led to reduced uptake in the scheme. I welcome the fact that the minimum payment of €350 was introduced for employees with previous net pay of between €412 and €500 a week, but anomalies still remain within the scheme. If we just look at a full-time worker on the minimum wage, they will receive less than €310 under the scheme, €40 less than the pandemic unemployment payment. And until this is addressed, Minister, fewer workers or employers will sign up to the scheme, increasing unemployment once we reach the other side of the emergency. The longer the relationship between worker and employer is broken, the more likely it is to remain permanently severed. The numbers speak for themselves. More than twice as many payments are made through the PUP payments than through the temporary wage subsidy scheme. That needs to be reversed. And already we're hearing of government preparing to taper off or cut these supports for people who have become unemployed and whose wages are currently being supported. Let me make it clear, Minister, at a time when the Department of Finance projects that as a result of this pandemic 220,000 people will still be unemployed at the end of this year, there is no way that we should even be talking about reducing supports for these vulnerable individuals at this time. The crisis has shown us, if anything, is that our social protection system was not fit for purpose. This is not the time to cut income supports. It is indeed an opportunity to rebuild a social protection system, a system that provides adequacy and provides households with a floor beneath which no one can fall. At a time of national emergency, with so many households in financial difficulty as a result of job losses, it is essential that all institutions play their role. That must include banks and the insurance industry, and so far this hasn't been the case. On the 13th of March, the Government, along with the 5 retail banks, announced a 3-month payment break for mortgage holders affected by the crisis. The Minister for Finance, you claimed these actions provide real support for those most affected by COVID-19. The reality is very, very different. What is being offered by banks is not a break, but a deferral, and a deferral that comes at a very hefty price. Let me give you one example, Minister. This is an individual we spoke with. He's a customer of Permanent TSB, a bank that is owned by you on behalf of the people of this state. He applied for a 3-month mortgage break. a mortgage holder, the bank replied to them saying, "You will pay more interest over the term of your mortgage than you would do if you didn't avail of the payment break." Indeed, permanent TSB made clear to him that the change in the cost of credit as a result of this payment break would be €7,739. That is the COVID penalty that Permanent TSB, a state-owned bank, is imposing on an individual who is finding it tough at this point in time, and many others who have lost their job, who have seen their household incomes destroyed by this crisis, and who are being penalised by banks with additional debt as a result of this emergency. And it is unacceptable. The interest should be waived during the period of the emergency for those unable to pay their mortgages or debts, not reprofiled with additional interest applied. It can be done, Minister. It's been done in other jurisdictions, including European jurisdictions, by other banks. So this caretaker government must demand the same from Irish retail banks so that they can start demanding action, particularly of banks where we either own or have major shareholdings in. And you can start next Wednesday at the AGM of AIB by demanding that they do the right thing. Let me also make it clear that there is major issues in relation to the insurance industry. Despite the calls from the central bank for the insurance industry to offer rebates to customers, insurers are refusing to do so. They are still refusing to offer premium reductions or rebates to motorists despite a sharp decline in cars on the road and the number of claims that are being made. For businesses, the problem goes much deeper than that, but no less challenging. As thousands of small businesses are battling for survival, insurance companies are determined to make the battle harder by refusing to pay out on business interruption, despite it being written in black and white in their insurance contracts. On the 26th of March, I stood here in this chamber, and again last week, and I raised the issue of FBD. This is despite the fact that that insurance company gave written assurances to businesses that their policies would be covered as a result of an outbreak of COVID-19. That insurance company is failing to pay out, forcing individuals to take them to court. We need to step in. We need to ensure that the central bank do what I've requested them, that they audit the way that these insurance companies are handling these claims. And let me also say, Minister, and I've said this repeatedly, it is a disgrace that you have refused to sign into law legislation that was passed by the Dáil and the Seanad back on the 26th of December that offers additional protections for individuals and businesses in terms of insurance contracts. And indeed, in terms of some of the court cases that I am aware of, that legislation would have provided additional protection for them. So do the right thing. These houses have passed that legislation. Sign the letter to allow that legislation to take effect. In relation to the challenges faced by businesses, they are very, very great. We have large swathes of our economy in lockdown. Cash flow problems are becoming more severe, with debt mounting, and their survival is on the line. They require immediate liquidity supports if they are to survive to the other end of this public health emergency. To date, the government provided supports have been inadequate. Existing supports such as the SME Credit Guarantee Scheme and the COVID-19 Working Capital Scheme not only require additional funding but reform. The Working Capital Scheme in place to provide short-term liquidity to businesses charges rates of up to 4.5% and is subject to the bank's own credit procedures. Let me tell you, I've spoken to businesses. They're not applying for these loans. They don't want additional debt at this point in time. They need zero-interest loans. And in a time when we're borrowing on the international markets at negative interest rates, that is the least that we can be doing for our companies. Last month, my colleague, the Minister for Finance, Conor Murphy, rolled out a series of business grant schemes in the north that provided £10,000 sterling to eligible businesses impacted by the pandemic. On Tuesday, he provided grants of £25,000 sterling for affected SMEs in the hospitality, tourism and retail sector. Together with a commercial rate holiday, not a deferral, for affected SMEs, government should be providing similar short-term liquidity supports for businesses. Minister, I'm running out of time because I'm sharing it with others, but there is a need for a sector-by-sector economic recovery, one that is, in my view, funded by stimulus, one that ensures that we build the homes, create the jobs, deliver on the universal healthcare and transform our social insurance system. There is a role for Europe to play in this. I've written to you in relation to our proposals in relation to do this. But let me be clear, there can be no return to the way that both Fianna Fáil and Fine Gael dealt with the last crisis, which is austerity, which is deepening and lengthening the recession. We need to invest our way. We need to use this opportunity to build the social networks and safety nets for our people and for our citizens. Gurmaigad.